The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. On today's show, I'm going to talk a little bit about trade setups and the news that came out over the weekend and how you might want to take a look at it when, it's so dramatic and they're talking about it, every 10 seconds over the weekend of what was going to happen with the elections, just to show you from a trader's perspective, what I'm doing as far as what I'm looking for. Then I'm going to talk a little bit about the cycles that we're under right now, because we've got this new moon cycle coming in on the 19th, which is also there's a Bradley date coming in on the 20th, and what the bias looks like for the market right now in the stock market. But first of all, I posted into the Tiger TV. When I get ready, a chart on the euro versus the U.S. dollar, and I posted this sometime real early this morning as the market was coming down. But what's important to look at here is that when the market opened up after the Greek elections, Sunday night, it was around, I think it was around noon, about 3 o'clock in the afternoon, I believe, New York time, we first started getting quotes coming in on the Forex market. Some of the Forex firms, the smaller firms, weren't even taking orders the first few hours. They wanted to see what the volatility was. Frankly, I think that's silly because they don't take any risk at all. All they do is match the bid and offers, and if the pip spread moves out, they don't care. However, that's neither here nor there. They didn't open until a few hours later, but everything was moving after the first hour so very easily. The euro went up to the 1.27 expansion of last week, up to that 127.60 level. It stayed there for well over an hour, backed off, and then it started down. And what I did was I just tried to show, what we'd be looking for as the first place for the euro to find support. And if you'll take a time to look into Tiger TV, you'll see that the low came in today, just a few minutes ago, about an hour or so ago, at that 125.60 and change level, which was a 61% retracement of the low from last Tuesday. And so this is how we use some of these numbers and what we're looking for. The important thing to realize here is the fact that when the market opened up at that point, the world was not coming to an end. All the problems had not been solved. Nothing had really changed. I'm also going to show a little bit later in the show the Dow Jones futures, because last night when that euro was moving up to that level, the Dow Jones futures were making a perfect 61% retracement. At that 12,700 and change level, which was off of the May high. And so that was also telling you that there was some really strong resistance coming into the market at that point, and the fear factor of the world coming to an end had dissipated quite a bit. So going short was not really that much of a big deal at that particular point. Now, I listened to Basil's show, and I have to agree. Well, I agree with him almost all the time, but this time even more so, because it looks like this market really wants to put in a major bottom. And that's what I think we've done. If you'll walk through this with me, I'll tell you what I see. And remember, this is my opinion. On May the 20th, we made a major bottom on the solar eclipse. That was 20 days ago, and we're coming into this, 28 days ago. We'll come in on the 19th. That'll be the next new moon. And in between that, we had the lunar eclipse on June 4th. That was the bottom. On that Monday. That's when the market made its final bottom. And then we had that P-index date on the 6th, and frankly, that one confused me because it should have come in exactly on the 6th, and if it came in on the 5th or the 4th, that would be 2 days off, and that's a little bit more of a tolerance than I like to see on those. But because it was the largest up day of the year, we have to assume that that's exactly what is happening. So this is my assumption is that we made a pretty major bottom on the 20th. We retested it at a lower level on June the 4th on the lunar eclipse, and now we are coming into the second part of this, which will be the new moon on the 19th, which will be coming in on Wednesday. And my assumption is that we could be pulling down into that level. That would be the ideal thing to occur, because we did hit the 61% retracement on the upside on that Dow Jones Industrial in the futures. And I will put that into the Tiger TV so you can take a look at it and see that it went to the exact tick of where it should have been. And so it's very important to the fact that it did make it to the exact point. We backed off almost 150 Dow points already on that. And so my assumption here, again, it's my assumption, is that we'll pull down somewhere between 300 and 500 points from that high, maybe down to 22,300, 22,400 in a day or two. But the market is really acting like it wants to go a little bit higher, and it just has all the earmarks. I mean, they have terrible news coming out of Europe, and the news out of China is not that good, and yet the markets are holding up. They really are. And so the biggest fake out that could happen is a nice rally here that the Bradley model is expecting starting after the 20th, from the 20th of June sometime into late July or early August, 4 to 5 weeks. We came down 7 weeks, so we could easily go up 4 or 5 weeks. And we could go up strong, we could go sideways, but, that's going to be an interesting thing to see happen, because the Bradley model is telling us that the negative things that are there are going to start releasing here this week, and there should be more positive things occurring. Now, whether that's going to happen the way that I think it's going to happen, I'm not sure, because remember, I thought the market was going to come down really hard, into the 20th, and in fact it did not. It made its bottom on the 4th. It's had a really strong rally into the 20th. We're going up. Whether we continue higher into Wednesday or Thursday, I'm not sure. But the way the market stopped last night for the euro, and also with the Treasury bonds. The Treasury bonds stopped almost exactly, at the number we were looking for last week. If you'll go into Tiger TV and take a look at it, we put the number at the 150. I believe 150.15, I believe, was a number we were looking at. And last night we hit 150.11. We missed it by 3 points, and we backed off somewhat from that point. So all this is fitting together like it does want to. It looks like it wants to rally. So we'll just have to notice what's going to happen later this week. And of course we have the show on Wednesday and Thursday, so we'll have a pretty good idea where we sit at that time. We've got a caller from Iowa. Are you there, Keith?
Larry.
Hi, how are you?
I'm good. How are you?
I'm good, thank you. What can I do for you?
Larry, wanted to have you look at the DBA with me, if you would.
Be happy to. I believe I have that on my watch list for today. Yes, I do. If you'll hold on with 1 second, I'll just pull it up. I'm back in Tucson, so I've got everything the way it is. The problem is I haven't had a chance to update certain things. The DBA is one of them, and it is really close to that. We hit that 786 almost exactly perfectly 10 days ago, and so far we've held it, and that retracement that we just had this week might be the test. So we'll have to give it a little more time, and then we'll know where we are. What can I help you with the chart?
Well, I had it drawn out going back to September last year, I think the 6th.
Yes.
And coming down to, I guess it's the first part of June, 2nd of June, something like that.
That's correct, yes.
And when you're talking about, you're talking about the 786 on the retrace then.
Yes, I'm talking about the 786 from the June low of 2010. I'm going back quite far.
Okay.
Because this is a really long-term chart. But on the recent chart that we're looking at, we just made a 786 retracement on Friday. That was we were watching the crude oil, and if you remember, we were watching gold and corn and beans, and all those things have held. So that's telling us that the DBA, should have a pretty good rally in force here if it can move up just a little bit.
I was looking at this as a possible entry right 25.75, something like that.
You know,
right?
Keith, if it were me, the difference between 25.75 and where it's trading now at 26.18 is, separating pepper from salt. It really doesn't make a whole lot of difference here. If you believe that crude oil is going to hold that 82 per barrel, which it looks like it tested again today for the fifth or sixth time, gold has certainly held its retracements. And so I would think that and certainly the grains. I mean, we've had a big move coming out of corn, wheat, and beans, because of weather-related things. So that's telling you that the DBA here is a very low risk. I mean, if you only have to risk less than one full $1 per share, in my opinion. So I wouldn't try to finesse the buy point too much.
Okay. Well, thanks so much, Larry.
It's my pleasure, and may God bless, and I hope the weather turns better for you guys in Iowa, because I know it's been pretty tough.
Yes, it has. Thank you very much.
You bet. Okay, folks, we're back, and we were talking to Keith about the DBA, which is the ETF for commodities, and we have certainly been watching those very, very closely. I want to get back to that cycle that we're talking about with the stock market, because I'm trying to finish that before the break here, and then after the break we want to get into the Treasury bond market and take a look at what it's doing. We have to look at crude oil, and we certainly need to I have to make one other comment about something that happened over the weekend, but I'll do that after the break. But the cycle that we're looking to have happen now is related to this Venus retrograde cycle that I've mentioned in the newsletter this week. And this cycle is 6 weeks long, and it happens every 18 months. And we have that ending very soon, and that should be very, very, very powerful move, because once Venus and if you remember, Venus and Mercury are the two closest planets between the Earth and the Sun, and they move back and forth. And when they move back and forth in sort of like a wobble, it's not wobbling, but it looks like they're going backward, but they're not. That's called retrograde motion in traditional astrology, and that means a lot for people that look at charts and read charts. All I'm looking at is the cycles that are related around those. So once that comes off, Venus gets off on the 27th, I believe, of June. We should have even more volatility than we've had, recently, because we've had very little volatility, folks. So I think the biggest move we've had in the Dow, which was on the P-index day of the 6th, was 300 points, and that was an up move. And, beforehand, we had moves of, 400 points, more than, half a dozen times last year. So we should start getting some more volatility, and that's what we're looking for. Basil spent a lot of time talking about the VIX index, and boy, I have to agree with the VIX index. You just keep an eye on that. We're going to look at that after we come back from the break, because it's making a perfect Gartley buy pattern down around the $18 level in the VIX, and it's had a pretty good move off the bottom in a perfect ABCD fashion, and now it's coming down and testing ABCD fashion. So we'll look at that when we come back from the break. The VIX index, 877-927-6648 if you have any questions.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648. And I want to give before we get into the, I posted into the Tiger TV the volatility index, and it's pretty much it is the same pattern that Basil was talking about. You can see the support that we're looking at in that area between 18 and 16.5. It makes a big AB equals CD Gartley. It made the ABCD up on the upside exactly at the 1.618. Back on June 4th when we had the full moon and lunar eclipse, and now we're coming into the 19th, which is the new moon. And so we'll have a pretty good idea of the cycle. Remember, these cycles are only between the new moons, it's 28 days, and between the new moon and the full moon, it's 14 days. That's all it is. That's all you have to worry about. Now, I wanted to mention something. We lost a market commentator. You folks probably don't remember him, but his name was Dan Dorfman. Dan Dorfman and Myron Kendall were regulars on the Lou Dobbs Show. This was long before we had the CNBC or any of the things. We had TFNN, which was the original CNBC out in California, but not TFNN. It was what was it? Oh my gosh. Sorry, Tom. FNN, Financial News Network out of Los Angeles, that eventually was bought out by General Electric from Merrill Lynch and became CNBC. But Dan Dorfman was on the show, and I was lucky to be a guest on that show at one time. They were a lot of fun. We didn't have a lot of things going as far as TV programs or CNN and stuff, going back 30-some years ago. So he passed away at the age of 80 yesterday, which brought a little bit of sadness to me, but he had a good life and everything, so not a problem. In the later years, he ran into some bad times because he did a few insider trading things that didn't go to jail, but they had to pay a few fines, which was, I guess, pretty good. We got a call from John in Philadelphia. And, John, are you there?
Good morning. Good afternoon, Larry.
Good afternoon to you. We'll start, and then we'll have to take a little break in the middle here, and then we'll finish up as you go. What can I help you with the bonds?
Larry, this morning I shorted the I used the notes, the ZNU2 contract. Could have used the bonds, but I used the note contract and shorted that at 133.26. Bought the TBT at the corresponding price. I wanted to ask if I see it correctly that there's a little 3 drives to a top pattern in those notes, or whether I'm kind of force-fitting what I'm seeing with a Pesavento pattern. So why don't you comment on that, please?
Okay, now on the notes, are you looking at a daily pattern on those, John?
I'm referring to I'm looking at a 2-week hourly, and
okay.
I see 3 highs Thursday, Friday, and Monday that look like a 3 drive to a top pattern, frankly.
That is exactly what I'm seeing also. What I'll do is I'll put it into Tiger TV so that the folks can take a look at it. But looking at the hourly chart, that you're looking at that particular chart, you certainly have 3 nice drives that were, you're talking between the 13th and the 18th, correct?
Exactly.
Yes, that's exactly what we're looking at. And what I'll do is, because we had that, the news announcement that came in, overnight, the bonds started out very poorly. They were down about 2 full points, and then the notes were down 1 full point. And, of course, after they realized that news really doesn't mean very much, they went up and they went ahead and made new highs. But they did make a 3-drive pattern up at that level, and that 3rd drive is actually a perfect, AB equals CD. Now, the notes made the exact number. Bonds missed it by 3 ticks. So, we'll have a good idea what's going to happen to bonds here when we come into the end of this week.
Excellent. Larry, could I just follow up? If that speculation of yours is correct, would that then indicate to you, Larry, you'd be targeting a retest of the lows of June 11th, or conceivably underneath? Would that be the target as you see it?
John, you're talking to the wrong guy. I think I'm looking for a retest of the 1983 lows. I'm very, very bearish. Yeah, I know. No, that's the first spot. Is that area around area around 144 in the bonds, and that area in the notes. The notes held up a whole lot better. That area in the notes would be around the 131 level is the same level in the notes.
Right. Hey, listen, thanks so much, Larry. I'll let you go.
Yeah. Well, that's okay, but that's one of the problems you have as analysts and stuff. You do have an opinion, and sometimes it gets you in trouble, folks. Okay, we got to. Okay, John. God bless. 877-927-6648 if you have any questions.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a call from Marshall in Washington. Are you there, Marshall?
I sure am. Good morning to you, Larry.
Good morning. What can I do for you?
Oh, I just wondered, since the bonds went ahead and made that perfect ABC during the night, about the TBT. Should we just jump in now or wait for it to come back down to the 618 at, I think it's 1525?
Well, 1525 is what I'm looking at as far as, the TBT, but frankly, Marshall, I have such a bias on this market. I'm so bearish bonds that the difference between 1550 and 1525 is the difference between salt and pepper, in my opinion. So I would just buy it and then put a stop below the 15 level. You have to risk about half a dollar in it. We still have the possibility that we could have another flight to quality, if you want to call it that, because if you're watching the yields on the Italian bonds and also on Spanish bonds, those yields are going into new high grounds. They're over 7% now on the Spanish bonds. And frankly, we're in a debt cycle. It's just a question of how it ends. It's going to end badly. It's going to end badly for us too, because we just can't keep paying our bills with funny money, and that's what we're doing. So.
Yeah, it can't go on. It's someday, payday someday. Well,
that's my opinion. So, like opinions, everybody has one.
Yeah, and some of them don't smell so good. I know.
That's correct.
Okay, well, thank you very much, Larry. I appreciate you, and I appreciate your show.
Well, thank you for calling in, Marshall. I appreciate it, and may God bless. Okay, thank you. Just to talk a little bit more about the Treasury bonds here. This thing started, way back. The bonds started trading as futures in 1976, folks, and they were immediate success at the Chicago Board of Trade. They basically took over, the movement from silver and stuff that was going on at that time. The grains were still quite heavy, of course, but the bonds were the big daddy rabbits of Jackson Boulevard over there. Let me tell you, if you were a bond trader, you had a star over your head, and many fortunes were made down on the bond pit. And those pits were huge. They were 4 and 5 times the size of the soybean, wheat, and corn pits. I mean, they were usually big. Now everything's electronic, and it's much easier for us to trade because we're basically like floor traders now. We pay $3 or $4 for a contract. There's no out trades. You get immediate execution. The stops are, really pretty close unless you're, trading into a report. So you have all the advantages of being a floor trader with none of the disadvantages. And the biggest disadvantage of a floor trader was an out trade, and that is where the other side of the trade, in other words, you bought someone from somebody else, and then at the end of the day, they didn't recognize that trade. The reason most common is they didn't recognize it is they had a big loss in it. Well, after you have several of these on the floor, you're banned from trading and you get kicked off the floor. Now with electronic trading, we don't have that problem. And so, it makes it much easier for trading. And this is why our trading volumes have gone absolutely ballistic, and also why the prices of the shares on the exchanges like the CME, have gone from, around $35 or $40 per share to well over $600 at one time. I paid $100,000 for my CME seat. I had a IMM seat, which was a international money international money market exchange, was part of a Chicago Mercantile Exchange. It was like a subdivision of that. Regular Merc seat was around $250,000, and an IMM seat was $100,000. Later, they reached parity, and I think they're worth about $4 million now. That's one of my silly trades. I got out of it $119,000 after trading on the floor for 3 years with it, but it's neither here nor there. If I count up all my mistakes that I've made, I'll be on the air until Tom O'Brien's 135 years old, so I don't want to go into those. Okay, now, the difference between the bonds and the notes, someone asked a question, why do one or the other? The notes are the things that are between 5 years and 20 years, and then 20 years and on are the bonds. And the bonds are the more volatile. They trade a little bit more heavily, and those are the things that they take to measure what the mortgage rates are. And so your mortgage rates, on a 30-year bond or under, on a mortgage rate on a 30-year mortgage is under 4% usually. Of course, depending upon a lot of factors, including your salary and credit level and stuff like that. So these are why they're traded so frequently. They use them for hedging quite a bit. Those of you that follow PIMCO, Bill Gross, they do very well, with their yields and stuff. And one of the reasons they do so well is they are one of the largest operators in the options market. In other words, they'll go in and sell premium, both calls and puts, in order to take this premium in when the market's very expensive like it is now, because it increases their income by a great amount. And that's another function of what the market does. It gives you the chance to do both, and that's really what you're trying to do, either go long or go short. So this is what you're trying to do when you're doing this. I think someone asked me a question, what I thought was the most important thing that's happened over the last the last 2 or 3 weeks since all this Greek stuff is going on. And frankly, the fact that the market could rally into this stuff, which is good because the market's going to do what it's going to do anyway. And I believe that we are going to be down much, much more later in this year than where we are now. And all I'm going to be doing now over the next few weeks is preparing for the next, what I think will be the next cycle high in the Bradley model, which should come sometime in late July, early August. As we get closer, we'll have some better ideas of where the price levels will be if we are, in fact, correct. And that's what we'll be watching right now. But right now, I think you got to get ready to trade both sides of this thing. After that June 4th bottom on that full moon lunar eclipse, it came out of there really strong. The P-index stayed the 6th. The market was the biggest up day it's had. And so, it looks to me like, we've got a positive bias here. That it doesn't make any difference what the news is. That's just what it looks like. And it's beginning to look that way in Asia and a little bit in Europe, but especially in the United States. These things are looking pretty good. And some of the sectors, that Basil pointed out, are actually looking, relatively strong, given, where the rest of the markets are. So the financials have held up okay. And now with the commodities holding up, that's also telling us that there might not be, a commodity-type meltdown like we had in 2008, at least not yet. But we know that the price of gold must hold $1,522 per ounce. And the reason for that, folks, is quite simple. It's hit that 61% level 6 times in the last 7 months, coming off of our lows of last year. That is not a coincidence. Gold is a very, very heavily traded market. And believe me, that thing is etched in stone. People are buying every time it gets down to that 15-20. People have been buying. Now, when you get down there again and we go through it, that support will become resistance, and then there'll be a totally different thing. But for now, I think that we'll just have to assume that it's going to hold that level, and then we will be in pretty good shape. Now, I wanted to go back to talking about what happened last night with Greece, because I was watching the news starting at about 3 o'clock in the afternoon New York time. And, of course, I was watching the euro, and I was watching, how the stock market was going to open up and how the British pound. And all of them opened up very quietly, given the fact that, the news was very positive and everything. And the S&P opened up about 10 points. About an hour later. But the thing that I was really keeping an eye on was the U.S. dollar index, because of the fact that it's so heavily weighted by the euro. And we've had this big move in the dollar since last September. We made that big ABCD with a 3-drive pattern that culminated back on that lunar eclipse of June 4th. And since that time, we've been down about 13 days. Now, we made a slightly lower low last night when the euro was up. And now we've reversed and we've taken out the highs of Friday, which is a positive thing. And so the next level we'll be looking at will be the 83 level in the U.S. dollar index. We're trading at 82.26 right now. And so that's the function of what we're watching. Because if it can get above 84 in the U.S. dollar index, that means the euro would be really heading, into the sewer. And then it looks pretty bad. Now, if you take a look at the euro on the daily chart that I've posted into Tiger TV as one of the first chart that I put into Tiger TV today, I use the hourly to show you the last 14 days. But it completed that ABCD level within about 20 pips at that 127.60 to 128 level. And, that's coming off the low at 123. So it rallied well over 500 pips, off the bottom. And that's just short, that's just an oversold market. These markets don't go straight down, and they don't go straight up. And so when they hit these overbought and oversold levels, you want to be sort of prepared for it, because you don't want, if you're short the euro, if you're short from 138, it really doesn't make a whole lot of difference, except that it took 500 pips away from you. And that's not fun, when you watch your equity dissipate by 15% if you're doing that. So you try to trade around it if you possibly can, and that's what trading is about. It's not about buying something at 10 and watching it go to 400 like Priceline and some of the other stocks have done. Those are once in a million. Well, they're more than once in a million, because they've happened so much recently, but they don't happen that often. So that's what I look at as far as what I'm focusing on is how much I have at risk, and I'm interested more about when I enter a trade, what is the potential of the thing going to work, is the probability in my favor, and then how much do I have to risk, to see if I'm going to be right. And I expect to be right about 6 times out of 10, and try to make $1.50 for every dollar that I risk. That's what I'm watching. Last night was very exciting to watch because there was so much news going on in the market with the Greece. I had no idea what was going on. Fortunately, I have some friends in Greece that were Skyping me and telling me the election polls and what it meant as far as whether it was pro-euro or against the euro. But, frankly, they said it really doesn't make any difference because it was pretty much a toss-up, and they still have to go through another, a parliamentary procedure to get some type of a unanimous vote so that they can stay in the euro. Milton Friedman in 1999, when they brought the euro out, and Milton Friedman, if you don't remember, he was a Nobel Prize economist. He said this was one of the things that was absolutely doomed to failure because there's no way that you could get 22 countries to agree on anything, and especially when some of them are much more powerful than the others. And this is why the UK wouldn't enter the euro, is because they felt that they didn't want to be involved in something that didn't have a really good possibility of working. It's worked pretty good for 10 or 12 years. And remember, it's had some monster swings, folks. The euro has gone from 85 to the dollar all the way up to 165 to the dollar and then back to 85 to the dollar again. And now we're trading at about the 126 level. So it's had some huge swings in between. So it's certainly tradable. And it is by far the best thing to trade. If you want to trade something, there's nothing better to trade than the euro versus the U.S. dollar. It trades 5.5 days a week, has the best volatility, it has the best liquidity of anything you could possibly trade. There's virtually no slippage, and it follows the numbers and the patterns that we look at, almost with clock-like precision. So if you're interested in trading, Forex is the best thing to look at with the euro versus the dollar, the pound versus the dollar, the yen versus the dollar, and other crosses, the euro versus the yen versus the pound. They're also very good, but nothing compares, to the U.S. dollar versus the euro, folks. That's the main thing that I watch, and it tells you that's where the money's moving. I mean, like if you remember the thing with what was that, Willie Sutton, the bank robber, and he said, "Why do you rob banks?" He said, "That's where the money is." Well, the reason why trading is so good is where the euro is, so that's where you should be trading. I mean, that's where the dollars are. That tells you what's moving. If this thing in Greece would have really been great, the euro would not have opened up 50 or 60 pips. It would have opened up 150 pips, or it would have opened down 200 pips. So by doing what it did, it was telling you that nothing really happened. One of the things that I want to try to get off. Well, let me stand up on my soapbox for a minute. Back many years ago, not many people ever traded Forex. You had to have millions of dollars in the account. You had it set up with a special Forex bank. There was Citibank, Deutsche Bank, stuff like that. But now there's many Forex banks, and Forex is available to just about everybody. Forex is actually cash moving, folks. They're moving around. In other words, if Nissan is selling engines for their cars, they are going to have to convert that from yens to dollars, and that's really what you're trying to do. Is you are taking the other side of the trade. And back on my soapbox again. And one of the comments that I always get from people is says, "Don't you feel like you're stealing money from other people?" And the answer to that is no. What I'm doing and what we're all doing is we're providing liquidity to the markets. If we're right, we make a profit. If we're wrong, we lose money. And we got Jamie Dimon sitting up there in front of the House Representatives today, apologizing for him losing money. Folks, that's a bunch of BS. That's J.P. Morgan's money. He should not have to apologize to it. Now, if he has to come to the Fed to get reimbursed for it, then he's got to apologize for it. But frankly, when they lose their own money, then that's a different situation. And I'm afraid that what they're going to be doing is taking these banks and putting handcuffs on them. And that means the liquidity that we're looking at is going to have to be taken by other people. And guess who the other people are, folks? Raise your hand if you're in the front of the class, because it'll be us. 877-927-6648. And we'll wrap this up in just a bit.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we have our friend Mike from Daytona Beach on the line, I believe. Are you there, Mike?
Yes, I am, Larry.
What can I do for you, my friend?
Larry, I don't know if you've covered this earlier in the show or not, but looking at the Bradley model and where the markets are now, how do you think it may play out on the intermediate basis? Do you think we could run higher into the 17th or 18th of July where the next major turn date is? Or
it won't be straight up. I don't believe it'll be straight up, Mike, because we have plenty of people that are wanting to buy it on a dip, and we got plenty of people that are selling it on the rallies. So I think we're going to have some up and down move here. The key that I'm watching is what happens here on the 19th and 20th, coming into later this week,
right?
Because that'll be the the new moon, and we'll have a pretty good idea, because you're supposed to be buying on a new moon in a bull market, and that's what happened on the 20th of May. And, it went up for 8 or 9 days, and then, went down into the 4th. So that's what I'm assuming. The real key, Mike, will come in late August or late July or early August, because that's when the negativity comes back in again.
Mm-hmm. Okay.
So that's what I'm waiting to see. We have some resistance in the S&P in the futures at the 1355 level, which is the 61% retracement. Now, we made that in the Dow Jones last night when it was up 100 and some points on the open. But the S&P, because it was not open, did not do that. And the New York Stock Exchange Index, which I watch all the time, is far, far lower, so those levels are, even though the market might be looking strong because of the Dow or the S&P, if you look at the NYSE,
right,
it's just having a normal correction. If you went back into April, when we had some of those things, we rallied from, April the 9th all the way through the whole month of April, and then we topped on May the 2nd. If you remember, that was a big Astro date at that time where the Bradley model was turning down. So the market rallied for 3 weeks, not straight up, but it still rallied. So what we're watching now is the key date, which next one will be the 19th. The following one will be the 27th of June, and then we got a whole bunch of them coming in around the 28th to the 1st of August is the big one. That's the one we really have to watch next.
Okay.
But I'm bearish, but I'm not bearish right now. I just don't see. I was really bearish during May. It went down. I thought it was going to bottom around the 6th or the 20th, and it came in a little bit early. But I still believe we're going to go lower the end of this year. But the next few weeks could be interesting.
Yep. Okay. Well,
thanks for calling in, Mike. I appreciate it.
Bye-bye.
And I like Florida quite a bit. I was going to run in the Daytona 500 this year, but I didn't. I missed the qualifying because the van that was carrying my race car was a little late getting to the track. So I'll have to try it next year, I think.
Right.
Those guys, I don't understand how they can drive at 200 miles an hour, bumper to bumper like that. They must think they're in Los Angeles, because that's how they drive over there. Okay, we're going to be ending up the show here, and I wanted to have you folks realize that, we're coming into a good cycle. It's not a monster cycle. That's going the 19th and 20th. It's all related to the May 20th solar eclipse, to the June 4th lunar eclipse, to the one that's coming in now on the 19th. So that'll be interesting. My hope is, and I hate to use that as a trading word, is for the market to back off into that level. That would be a good buying opportunity if it backs into that day. And we'll be on the air that day. That's a Thursday, so we'll have a pretty good idea of whether we're going to actually, it's a Wednesday, so we'll have a pretty good idea of what's going to happen this coming Wednesday. Anyway, thanks for listening, and take care of somebody that has less than you today, and may God bless.